Ladies and gentlemen, good day and welcome to the Garware High-Tech Films Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Verma from EY. Thank you, and over to you, sir.
Thank you, Lizanne. Good afternoon, everyone. Welcome to the Q2 and H1 FY24 earnings call for Garware High-Tech Films Limited. On behalf of the company, I would like to express our gratitude to each of you joining the call today. To discuss the performance of the company and to answer the questions, we have with us from the company Mr. M.S. Adsul, Director Technical, Mr. Deepak Joshi, Director of Sales and Marketing, Mr. Pradeep Mehta, the Chief Financial Officer, Mr. Hari Nair, Senior President, Corporate Affairs and Finance. Before we begin, I would like to draw your attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors, which will be beyond management control. We kindly request that you bear in mind there may be uncertainties when interpreting such statements. Please note that this conference is being recorded. We will now start the session with opening remarks from the management team. Afterwards, we will open the floor for an interactive Q&A session. I would now like to invite Mr. Deepak Joshi, Director of Sales and Marketing, to make his opening remarks. Over to you, sir.
Yeah, thank you very much. And ladies and gentlemen, good afternoon. And thank you for joining us today to discuss Garware High-Tech Films Limited's financial performance for the quarter and half year ended on September 30th, 2023. Let me start by highlighting the key financial figures. Our consolidated revenues for Q2 FY24 remained steady at rupees 397 crore, and our profit after tax, PAT, stood at rupees 46 crore, underlining our stability and resilience in a challenging market. The PPF business maintained its growth trajectory and Sun Control film business reported volume recovery. However, the IPD business experienced a decline in growth. The company's specialty films contribute around 90% of its revenues, positioning it for the superior growth compared to the polyester film industry, which is currently facing overcapacity challenges. Additionally, our EBITDA stood at rupees 74 crore, primarily driven by increased PPF and Sun Control film volumes. However, EBITDA affected by margin pressure from IPD products and impacted by strategic investments in marketing and sales initiatives. Although marketing costs may continue in the short run to medium term, these investments are important for our growth strategy and are expected to fortify our market presence in the long run. In Q2 FY24, the CPD segment saw a revenue growth of 53% in revenue compared to the corresponding quarter last year, while the IPD segment reported a decline of 32% in revenue during the same period. Approximately 78% of income is generated from exporting goods, with 43% of that figure coming from North America, around 20% from Asia, excluding India, 22% of revenue is generated domestically, and remaining 15% comes from other countries worldwide. Let me briefly explain our main product lines. Talking about paint protection film, in Q2 FY24, the PPF revenue has increased by over twofold compared to Q1 FY24. The robust growth was mainly due to increased demand from distributors in the United States, in addition to our renewed focus on the domestic market. We have expanded our local distribution network and effective marketing strategies in the domestic market. For the quarter, the PPF plant operated at high, around 118% capacity utilization, as we effectively managed capacity constraints by utilizing the available fungible capacity from the new Sun Control film lamination line. Additionally, the company successfully achieved its target of acquiring 500 OEM brand dealerships ahead of the planned schedule. It now aims to expand further by setting up a new goal of reaching 900 dealers within the next 2 years. Additionally, the company has made substantial progress securing partnership with almost 100 PPF studios and channel partners. That is nearly half of its target. We have signed agreement and commenced delivery with Mahindra Automobiles as the OE supplier for the PPF. Additionally, negotiations are going with 3 other major automotive OEMs. Now, I would like to talk about solar control films. In Q2 FY24, Sun Control film business reported a recovery of 8% in revenue when compared to Q1 FY24. The domestic Sun Control film business had an encouraging start by capitalizing on the untapped Indian market, the relaunch of safety glazing window films, and implementing robust branding and marketing strategies. We expect domestic Sun Control film business to contribute around 6 to 8% of total revenue in next 3 to 4 years. At the same time, our export business experienced an upturn driven by improved macroeconomic conditions and rising automotive sales, resulting in a recovery in Sun Control film business volume over the last 2-3 quarters. Additionally, our strategic expansion into complementary architectural film segments has been evident through the successful commercialization of decorative films in USA and spectrally selective films in European market. We anticipate a substantial revenue stream from the decorative film segment over the medium term. Lastly, the company has acquired a patent for an innovative adhesive system for window films, highlighting a significant technological advancements. And some more points from architectural segment is that we are now taking our current architectural film portfolio aggressively to the domestic market. We are looking on 3 key aspects: building consumer awareness, direct partnership with large hotels and commercial office parks, IT companies, banks, and further network expansion by onboarding new distributors. The initial response across the 3 streams has been promising. Our digital campaign, coupled with physical and on-ground marketing at the residential complexes, has been well received. Our direct partnership approach has already given us few solid openings, which we hope will fructify over the next few quarters. All in all, we believe that this segment will become a strong growth engine for us in the next 3-4 years. Now, I would like to take your attention to industrial product business. The revenue share from our IPD business decreased to 34% in Q2 FY24 from 54% in Q2 FY23 due to a strategic focus on expanding our CPD business and challenges in IPD business. For this quarter, capacity utilization of IPD was 78%, a decrease from 99% in the corresponding quarter of the previous year. A revival in this segment presents an opportunity to optimize the profitability and volume recovery. Within the IPD business, our specialty films, including low oligomer, release liners, and other intermediates, demonstrated consistent growth. We have successfully obtained patent for our low oligomer products, with more patents currently in the pipeline for IPD business. While the shrink film segment faced a decline to lower demand, however, commercial agreement with major US customers indicate growth opportunity, and challenges persist in commodity-based IPD films due to oversupply in the polyester film industry, a trend we foresee reversing in the upcoming quarters, or we can see that there will be a good growth on shrink film business, especially from the North American market. Let me briefly talk about our finances. An achievement we are particularly proud of is the full repayment of our term loans, resulting in a gross debt balance of 0. Additionally, our cash reserves stood at 350 crores, affirming our strong financial standing. We were able to achieve a solid ROCE of around 20.68% and a ROE of 15.42%, that is excluding effect of revaluation reserves, indicating an optimum utilization of funds generated in the business. While our inventory turnover rate remained stable at 6.5, our robust working capital management practices have improved our working cycle days to about 4 days in H1 FY24. In conclusion, Garware Hi-Tech Films Limited remains dedicated to fostering innovation, meeting market demands, and solidifying our market position in the global value-added film industry. We are confident in our growth trajectory and remain committed to delivering value to our stakeholders. Yeah, and we have already uploaded the presentation into the exchanges, so hope it has been seen by most of you. And with that, let us now proceed to the question answer session you have on our earning numbers. Thank you very much, and floor is now open to Q&A session.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes.
Sure. So first of all, sir, congratulations on again a very wonderful presentation. We do appreciate every quarter our presentation has been having some kind of improvement with regards to much more details about the business and also more granular data points, which are quite helpful. So thank you for that, and hoping that the same will continue going ahead. And congratulations on achieving more than 100% utilization in PPF, which is one of the products which we just introduced about 5 quarters back, and we have reached that kind of utilization. Coming to my question, sir, first of all, as per your press release and also the presentation, you have mentioned with regards to the incremental marketing initiative expenses, which have been one of the reasons for the EBITDA margin not moving up. So typically, how has the marketing expenses, the initiatives moved up in last 3-4 quarters? What have been the amounts for last 3-4 quarters, and what do we expect it to going ahead?
Yeah. So, in the presentation, we have already shown like kind of expenses we are doing into the marketing. So, I will just explain like what it is giving us, and then Mr. Mehta and or Harinayak can explain like the numbers what we are doing. So, first of all, we have substantially increased as compared to what we used to do in the past. And what it has got to us is like I explained on the architectural segment, which is like the next growth engine for us, where we were able to reach like many commercial office parks, large hotels, IT companies, banks, and so on and so forth. And at the same time, many residential complexes where we have run the campaign which is focused on the areas which are like facing to the sun, where architectural film is really required. So such kind of granular, small marketing efforts, digital marketing efforts has been suggested by the agency. And second thing investing in dealership and network expansion in PPF and PPF has been great. And the volumes we have, the numbers are not, cannot be presented as compared to last year because they are even tenfold sometimes. Whereas if we talk of quarter-to-quarter growth in the domestic market also is quite strong. And we expect in another 6 months' time, the domestic PPF volume will be almost double from the current level. So there has been a very strong support from digital media and the external agencies to help us to grow the business. And in the idea of launching safety glazing film in India is also doing great. And for that, a very aggressive marketing campaign has been done with the digital as well as on the ground kind of initiatives. So these were, and this is in Indian perspective. And at the same time, I'm just back from SEMA show, and where we were visited by more than 200 dealers and customers from USA, South America, Europe, and Middle East. So we have done we have outreach to everywhere, like what we are doing, our digital media and our on-ground supports from the agencies has been so good that this kind of response is very overwhelming for us. And we have done dealer meets there where 125 dealers from all around the world were present, and we awarded them for their appreciation of the work with us. And then we launched many products like spectrally selective films, safety films, matte film which is in 72 inches, which is rarity into the world, and many different products like front windshield, etc. And we oversee, because of such good marketing initiative, we could see many major manufacturers were inclined to work with us, because after we published a big article on Window Film magazine and PPF magazine, which is world's most read in this segment, that we are the world's largest factory for manufacturing of sun control or window films and PPF. So all those initiatives were really, really great for us. And I hope I answered your question. If you have, if you want to know on the numbers, Mr. Mehta can help you with that.
Yeah, I surely want to know the numbers, sir, because since it is mentioned in a separate press release also with regards to the amount. So to understand, typically will this amount continue to stay at this level till what time? And incremental, what expenses further could be done? And also your presentation mentioned that probably this also includes some fee for a consultancy. So what kind of consultancy fee we are supposed to pay? Is it one-off or is it going to be there going ahead?
We since the start of this campaign, which started in May, we were doing a lot of social media, digital media initiatives, but with the consultants, we started in the month of May, and initially we have planned for a year program, which is really going well. Like I said, so many initiatives we have done, and the results has been come. So in altogether, that was the strategy to do for at least 1 year, and then we can take a call 3-4 months prior to that. And the percentage numbers or the comparative numbers, Mr. Mehta, if you can help me with that, please.
Rahul, if you can look at slide number 34.
Yes, sir. I've seen that slide, sir.
Yeah, so if you look
I
at
see the number.
0.8 is the total number which we have spent for this particular initiative, the India initiative, which Deepak has just mentioned. And the expenses is primarily on consultancy. Most of the expenses is captured there. We have put it in P&L. We have expensed it out. And if you see, we have given a highlight of what has been done over a period of last incremental revenue which has come from this particular exercise. Now we are at about 47 odd crores. India CPD business is 47 odd crores, which was 26 about a year back, and maybe a year prior to that it was much lower, very minuscule. Now it's about 47 in half year, and we expect this number to grow because of PPF and because of window film, sun control film, and going forward, hopefully the way Deepak has explained on the architectural segment. So,
sir, I do understand the benefits of marketing, and I do understand it is always important and imperative to do certain marketing expenses and incur brand promotion exercise. Just that this is an incremental number, and also if I take this as a quarterly number, then overall it looks to be on a higher percentage with regards to our profits, which is why I'm trying to understand the sustainability or what this number could look like going forward also.
See, the initiative is not only for India, though it is focused in India because there are a lot of initiatives we are doing. There is Middle East and there is another agencies which we are working for the other markets, including USA. So the number which we have shown is paid to the consultant or consulting agency, but there are further initiatives in terms of which is our always an expense on digital and all, digital media and all, which is on top of this. So, I mean, I understood your question. So the particular is 7.8 CR what we have shown here.
And this will remain on a quarterly basis going ahead? Somewhere around this figure?
This is something till April 24, and after that we'll take a call because we have still 2 quarters to go. So we'll decide like the incremental benefit versus the expense which we are incurring. That the call will be taken in due course.
Sure, that's helpful, Deepak. And so with regards to the value, the VAP contribution, we have done really well in terms of increasing our VAP contribution over last 2-3 years, and in fact, in last 3 quarters also it has moved up from almost 80% to 90%.
Yeah.
And the CPD, which is SPF and PPF, which are the higher margin products, has moved up roughly from 47% to 66%, up by almost an absolute amount of 100 crores.
Yeah.
But probably, sir, the margin improvement doesn't seem to be commensurate with the improvement on the value-added products. So, am I missing something, or possibly if you could share what exactly where, in spite of the higher contribution of the value-added products, both SPF and PPF, the margin improvement is somewhere probably below what it could have been?
Yeah. See, even in the last call, we explained you like the benefits, more benefits or percentage going up. It will take another year or year and a half because we are working on alternative components for PPF, right? So that will definitely improve the margins. So whatever we are trying to do is a long term. And why in this quarter we are seeing little not improvement despite CPD business first time going beyond 50% of the revenue is on IPD side. Even we have done the specialty business, but because of the market, especially on North America market, went really low in terms of demand. I think a lot of geopolitical tension and everything led to a lower demand from the North American market, which is the highest profitable business in terms of percentage for us in IPD business, right? So that was really low. So that's why this IPD component, you are seeing an absolute number that it has gone down, but the percentage also gone down because of its lower profitability. Because it was North American component was really low, but we are well on track to reverse this trend going forward.
Sure. Last question, sir, on shrink films. So shrink films has practically from June 22 quarter till March 23 quarter, for a period of 4 quarters, it remained somewhere flattish at around 50-55 crores. 1 quarter it slipped, but then it was back to 55 crores. Suppose that in last 2 quarters it has come down from 55 to 45, and in the current quarter 28 crores. 2 parts to that. What has led to this sharp downfall on the shrink films? And also you mentioned in your initial commentary as well as the presentation about some agreements with 2 major customers in US for shrink films. So can you highlight what is the potential of this particular contract or this particular agreement with these 2 customers, and when does it start commercial, and what time it could take to ramp it up?
Yeah. So as I explained, like North American market went really low on commodity, but especially not on commodity, I mean on the specialty business. So we have seen a decline in Q2 for the volumes overall in domestic, export, and especially on the North American market. So there were we were serving, I mean if you really see 2 years back, we are hardly there in North American market. Last year we did really well to get some customers there, but two biggest in customers in USA, they have qualified our products and commercial agreements has also already been done with them. So these two will start kicking us from the Q3, and probably in another quarter we can see a full value. And we expect around, I mean I can say overall North American market or US market on overall IPD profitability can be around 25% of IPD margins. But if this is, I mean on margin wise they are really good. So we can say like these numbers 20 to 25% addition can happen on IPD because of that.
Sure. Thanks Deepak and team. Thank you so much and wish you all a very happy Diwali.
Thank you very much.
Thank you. The next question is on the line of Priyank Agarwal from Equirus Wealth Private Limited. Please go ahead.
Thank you for the opportunity. So am I audible?
Yes.
Sir, two quick questions with regards to the SCF and PPF segment. So if you see the SCF segment, can you provide us with the revenue mix within the segment, like between architectural and safety glazing films? Also, sir, as you mentioned in the presentation as well.
The question, I mean, it was voice was little dull, so I could not understand the question, please.
So now it's clear?
Yeah.
So I just wanted to ask regarding the revenue mix within the segment. So we have architecture and safety glazing films. Also, it was mentioned in the presentation that architectural film is really going to, take off from here. So, sir, how do you look at this segment, architecture space specifically? And so also, I was observing that SCF segment, although it is mentioned that it is witnessing a volume recovery, however, if we see the YOY, the revenue has declined by 14%. So, what is the reason and how do you foresee this segment particularly going ahead?
So, first question was clear. Second question is about the architectural segment. First question is clear. Let me answer the first question. Like traditionally, I explained in the previous calls as well. So our technology and our, the business model for many years in the past has been to automotive segment of the window film, right? So with addition of PPF, that became very robust for us. Then there is lot of ups and downs, especially in the US market or even in India market. The car sale dropped last year and before that because of the chip shortage. And currently, because of high interest rates in USA, the sales, though the economy is going up, but still car sales is on a lower side because of high interest rates, which was like almost 4% has increased over 2 years. So that's why the car sale is a little down. So, then the company thought around 1.5 years back to have a strong presence, to increase its presence in architectural segment. So that's why we started promoting that segment. And that segment requires many new products that I explained to you, like we have launched a product called spectrally selective films in European market, then decorative films in US market and the rest of the markets, and plus certain safety films which are required to strengthen this segment. So all these things like product quality, product identification, they are mapping against like what market requires and to some extent to the competitors what they are offering. So we have made a strong portfolio of these products over last 6 months, and we are seeing a lot of good doors opened for commercial as well as residential segment on architectural business, right? So if you see percentage-wise, that was really low in domestic market, but overall world business, it was around 20%, 15 to 20%, which we expect to strengthen and without affecting the growth which we are experiencing in the automotive segment.
Right. So can this the revenue mix within the
sorry to interrupt, your audio is breaking up, Mr. Agarwal.
Yeah, I'm not able to hear properly.
Oh, yeah.
No, sir. The audio is still breaking up.
Hello.
Also, may we request that you return to the queue? Your audio is breaking up. We'll move on to the next question. That is on the line of Harsh Mulchandani from Chris PMS. Please go ahead.
Yes, thank you for the opportunity. Congratulations, Deepak, on a good set of numbers considering the challenging environment. I had 2 to 3 questions. One is, can you share the experience of winning Mahindra as an OEM for us? How did the process go through, and what was the discussion which led us to win this contract, and how long the duration is and the potential volumes which could come from this contract?
Yeah. Typically, no, we can't discuss what was the process and all those things. But I can tell you, typically it's a 9-month to a year process where product qualification is done, that it is tested for different conditions, environmental conditions, and there are weathering has been done to check whether these products changes colors or adhesive does not working well or kind of scratches and dust attraction. So many factors are there to validate the quality for an OE. So they were the first one. With whom we started, and we got qualification. So it was typically a 9-month to a year period. And similarly, immediately after that, 8-9 months back, we started another initiative. So out of that, 3 are almost in the closing stages after the testing and everything has been done, and commercials are also almost finalized. So we expect more to join this group in another quarter or so. Right, so that's what, and we are working almost to all big OEs in India, car manufacturers in India, and we hope to lock with most of them. This is my wish, but surely we will jump into many of them going forward. That's the thing. And in terms of volumes, again, this volume will be quite good incremental business for us. I cannot exactly give the numbers, though we have some forecast, but definitely I assure you that this will be a good addition to the volumes in domestic market, which I said in another 6 months period, by end of this financial year, we are expecting to the double the volume of PPF in the domestic market.
Got it. Perfect. And the second question I had was around the IPD business. So do we expect the volumes and the demand to recover anytime soon, or it would take some longer considering the entire macro scenario as per your estimate?
See, I can assure you one thing, that our Garware High-Tech is never a player which focuses on increasing the volume. So you can always see the less of revenues coming from that segment, especially commodity, because we decline the orders which are not profitable to us, right? So now I can tell you that the first 2 quarters last year versus we are comparing this first 2 quarters, the first half. So that has been, there was a good demand and good market for IPD last year versus this Q3 last year started the decline on margins and volumes for IPD business. So going from here, I think it's already bottomed out. And we have been able to, so our problem was little different as compared to the other competitors into the market, peers into the market, that North American market, especially on shrink, as I explained, went to some turbulence because of geopolitical tensions. So, and we are expecting them to back. And the good initiative that we have now have arrangements with two biggest American customers, and that is the additional one from what we have. So we expect the margins to come back to a reasonable level. Though the volumes may not come to fully into this segment, they can come back. I mean, we don't know, because right now I can understand from the peers that there are some peak stress sales and all those things were there for last 1 year now. That started Q3 last year. So this year it completed a year where people, the product started losing money. So there may be some kind of closures or something who are new players or a very low volume kind of players, right? So the specialty business will definitely do good. So it is already bottomed out. So I can expect only better from here, stable or better from here. So in terms of YOY, definitely we're going to do better than what we did previous years.
Got it. Perfect. And I'll just fit in last question on CAPEX. Have we made any announcement or any more further progress in the plan versus the previous call?
No, we have not yet made any new announcement, because we were using some capacities for PPF, like we achieved 118%, and we expect further growth by using the fungible capacities to grow further to that, right? And we are working on things, and any such decision will be made public. I mean, we cannot directly comment as of now on that.
Okay, fine, perfect. Thank you so much. Best of luck.
Thank you.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, you mentioned that we have spent around 6 crores for BCG. So isn't it this number is high for a company like us? And how long this will continue?
Sorry to interrupt, Mr. Bendre. Sir, can you speak a bit louder? You're sounding very soft.
But fortunately, I could hear, so I can answer. So, thank you, Mahesh. The decision, I don't think is like high or low, depending on the company's, it is, I believe the decision is how much gain can we do and how the company's, brand recall goes into the market for years to come, right? So our decision is to not only the branding, it includes branding, network expansion, distributor addition, dealer addition, new OEs, and taking our presence to every corners of the country. Like, we are doing this initiative with, wherever how much cars is sold in a small regions, like even we can consider Raipur, we consider like any small city in the country. So based on have mapped out, the agency has helped us to map out even the smallest of detailing centers who are capable of doing glazing or PPF, which they are not doing. Such kind of identification has also happened because of that. So this agency is helping us to increase our footprint to all over India and plus some countries outside India, and that is not limited to digital. And this is like a big network making for the company for years to come, which will leave its impact. So it's definitely a very good initiative, and it's giving us its returns.
Sir, how long this will continue? The cost is one time, or it will keep recurring?
So we have, I answered the question that we made a program for first 1 year, and looking into its growth, we are quite happy with that. And once we see that it is now the growth pattern has stabilized and the network channels has been opened and our brand recall has been quite permanent, and we'll take a call on that. As of now, it's a 1 year program.
Sure, sir. And sir, so many expansion plans have taken place across the product lines. Any new customers we were talking about. So are we still holding our guidance of achieving 2,500 crores of revenue in FY24?
Yeah, sure. We are doing that because we are our new lamination line yet to go full. Plus, we are also, I mean, as I said, in due course, we will announce whatever it takes for us. But yes, definitely, the guidance is right, and we are on our path to reach there.
Thank you. Thank you so much, sir.
Thank you.
Thank you. The next question is on the line of Sudhir Bheda from Bheda Family Office. Please go ahead.
Yeah, good afternoon, sir, and season's greeting. Happy Dhanteras to you, sir.
So, thank you very much.
Just 2 days back, I have become your customer, and I am very happy with your service for PPF.
Okay, that's really good to know, sir.
Sir, my questions are like, as we are discussing, you are discussing with other participants, that there are a lot of tailwind in terms of PPF, and also with the agreement with the 2 customers that also will give, a flip to the IPD business. And Windows is also now back on the track, doing well in India as well. So, is it right understanding that H2 would be much better than H1 in this fiscal?
I think that would be a very forward-looking statement to answer that question. But as I said, I can only tell the initiatives what we are doing, and the results are really good of that, right? And especially on IPD side. So, I mean, I would say like we are on course to achieve as per in line with what we planned, right? So, as I explained to you just now about the SEMA show, like which is the biggest show in the world, and where we could reach out the customers, which were like I mean, we have been able to get back to many of them whom we were planning to do in the past. So 200 plus like dealers and customer list is a big thing, and we are working with them. And then many new products has been launched. Then architectural segment has been something which we are really working hard. And further, there is further upside on PPF. With all those things, we are quite confident to make a good show for us.
Sure, sir. And sir, for the next fiscal, the growth driver would be PPF, and the growth would be led by PPF, or how we should look at the 24-25 years?
So on going forward, there is one aspect, as I said, biggest growth driver is going to be architectural segment, which we will use for our new lamination line, which is yet to be fully filled up because that was commissioned in December 22. So it's almost 8-9 months since that is there, and we are using the capacity as a fungible one for the PPF. But there is a lot to do on that particular thing. So we have yet to go, like fully utilize that. So there is a lot of potential of growth. So the growth driver is going to be architectural segment. Then PPF, there is further upside possible with the fungible capacities, maybe around 30-40% more to that. And then the company will take, I mean, if the growth the trajectory continues like this, then we have further plans to continue with that.
Sure, sir. And so lastly, just what I heard was 2,600 crore turnover, FY26, right? That's made by previous participant.
Yeah, 2,500 crore has been, I mean, that has been the plan and the guidance, which we will achieve that.
Sure, sir. Thank you, sir. Thank you for the opportunity and all the best.
Thank you very much, sir.
Thank you. The next question is from the line of Dwanal Desai from Turtle Capital. Please go ahead.
Hi, good afternoon, team. So Deepak, the first question is, I think in your presentation, you have mentioned that, the new sun control capacity of 1,800 lakhs, will get utilized by FY25, and typically 500 crore of additional revenue can be generated. So I understand some utilization will be happening currently. So what is that number? And going forward, to get to that number, are you relying more in terms of this fungible capacity getting utilized by PPF, that is what you are factoring in?
Yeah. On new lamination line for window films, I can say that is being utilized around 15-20%, because it does not be directly the incremental, because these lines are quite efficient lines. So wherever we find high margin and good the product which is giving good margins, we produce there, and rest of that is being used for fungible capacities. But the company is also funding fungible capacity for PPF. So there is a lot to go on that. We can even debottleneck some of other capacities which we are using currently for this, some other lines. So we will ensure, this is currently now, usually the winter season is the low season for window films, right? And quarter one, quarter four, which is the one which gives like American market, they start planning, and European market, they start planning for the summer. So that is where the real test of the capacity will happen. But we are quite confident, and currently we are working on the plans for with our customers, like how do we want to take this capacity further, and plus at the same time working with our distributors and channel partners for the new products which we have recently launched. So with all those things on Q4, there will be like the utilization will be good, but how much we will come to know. And all the capacities remaining for that, we will use as a fungible capacity for PPF. If this line is fully filled up with the architectural and other window fill products, automotive fill products, so we have other plans which we are currently working out to use some other lines as a fungible line, as a backup to PPF line. So these are all intricacies, but definitely this all is going to, so any other volume coming from the market will be catered by us for at least till we reach 2,000 to 2,500 crore.
Right, because the only question is that you are seeing strong demand in so many areas, domestic also, we intend to grow very fast. So will we not end up in a situation whereby, we'll fall short of capacity if everything materializes? So that's the broad, question.
No, we have that in mind the Garware management also takes care of that. So we have everything on our radars, on our, plans. So it will not be. We can assure you that no business will be turned back because of no capacity available.
Got it. And second question, sir, in the US, one of the larger PPF players, one of the largest PPF player, he's kind of, what we are understanding is that he is reorienting supply chain, and one of the major supplier, that agreement got renegotiated and, is diversifying. So are we likely to be a major beneficiary of that? How those volumes, are ramping up and will ramp up? Any color on that?
Yeah, there are many such opportunities. I won't go into any particular of that, but we are quite strong in that market, and we have not only that, we have further opportunities available, which you may not have heard. There are some plants in Israel which got closed down, and we eyed on the supplier, the customers of them, and plus there are certain more customers who are not happy with their current supply lines. So we have many more in pipeline, many manufacturers, they would like us to serve them. So these negotiations are on. So we are aware of each and every details into that market. You are right, and that is a big buzz about this particular thing in market. And we are cognizant of the facts, and we are taking according action.
Okay. And last question. So I think this quarter our CPD division has done extremely well. And for whatever reasons, IPD challenges and everything, the margin impact is not visible. But directionally, when things normalizes, is it safe to assume that if our CPG division grows faster and increases its share in the overall revenue mix, the margin profile will increase? Is that a right hypothesis to work with?
Yeah, there are, as I said, on certain components which we are working on alternatives, because the primary the company focus is always supply the quality products to the market, and so the quality of PPF has been quite well established and stabilized. So now, as I explained, many more manufacturers they are in line to work with us. So at the same time, we, as a continuous development program, more alternative components are being discussed and under development for PPF. So going forward in 1.5 years, there will be a better realization owing to these new developments. And on IPD side, definitely the business, whatever will grow on a very specialty, like a shrink kind of business, like new initiatives on North America and all those business. So with this, I mean, we can expect your answer. I think last quarter also we understood we answered the same question about the margin improvements. So this is the plan basically to improve the margins.
Okay, got it. Thank you. All the best.
Thank you.
Thank you. The next question is on the line of Shrinjana from Ratnatraya Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So I had two questions. One is just a follow-up on the earlier discussion. So regarding the capacity utilization in the second line of sun films, right? Like it's mostly the fungibility between the sun films and the paint production films. Is that correct?
I mean, the line was a little unclear. So, I mean, the new lamination line is basically primarily designed for window films, right? Sun control film, which are both automotive and architectural. And we use that line as well for component or component planning for PPF as a fungible capacity. So whatever available, we are using that to produce some components of PPF.
Correct. And we are not planning to do any additional capex on the PPF line unless like we use this line first. Is that correct? Because we are currently at full capacity in the PPF.
This assumption, as I said, we are working like how much capacity is available for coming time, because capex typically takes 9 months to 1 year to fully utilize since the time we do that. I mean, we start working on that. So in that line, there are certain debottlenecking for making some components rather than not from the new line, but from some existing lines which are not being used. I mean, we are doing capex and some improvements in those lines to use them for further expansion on PPF line. In case of any the new line, which is a brand new big capex, that will be announced to the market. So I cannot comment on that right now. But again, the capacity and the way the PPF business is increasing, and in the season to come for sun control, there will be a lot of demand which will be catered. We have the capacities available, or we are debottlenecking to meet those demands in going into the next quarter.
Understood. Thank you. Just one more question is on the patents. So these patents which we had mentioned in our presentation, are these registered in US or in India?
So, Mr. Atul, would you like to reply on that? Our technical director, Mr. Atul, can reply on that. Okay. He's in US. may not be in the call. So these are for India market as a start. This is because these are product patents, so they are for special manufacturing in India market.
Okay, understood, sir. Thank you.
It can be expanded to the market, so that also work is being done, right?
Right. Okay. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Karthik from Suyash Advisors. Please go ahead.
Sir, good afternoon, and compliments on a very impressive performance under challenging circumstances. I'm just going back to the point about profitability in a slightly different way, which is last year when IPD was a much larger percentage of your revenues, your gross margins were higher.
Yeah.
Whereas this year with a much higher contribution from PPD, and some improvement in SCF, your gross margins are still lower. Clearly, PPD is what pulls down your gross margins. So say 18 months down the line when, let's say, you have integrated backwards, so if you had to give us a perspective on gross margins across three broad categories, which is SCF, PPF, and shrink films, could you give us a range and how this should evolve over a period of time?
See, if we talk on per unit margins, that on unitary basis is PPF, Sun Control, and then IPD, which is on kilograms, whereas these two are on square feet. But if we talk of percentage ones, so there are a big basket of Sun Control films. It always depends on the product basket. So, when the demand seasonal goes up, for example, I'm talking of Q4, that time the high-end products like IR range goes very high because of the summer season and all. So that season, window film margins and the mix becomes very strong for us, right? But going forward, there is a lot of possibility, like where IPD is the backbone of CPD and a lot of new products are being developed for CPD division. So there the margins for CPD as well as IPD may improve. But that is again, as I've given a guideline for minimum 1.5 years, because it also depends. These are the plans, and there is a process on this business where stabilization happens. Like you take trials, then you take internal trials, lab trials, internal trials, and market trials. So the process is quite long. It is typically 6 months to a year, like I explained, for validation of OEs also. So that's why this process sometimes looks slow, but they are very steady and they give us a long-term return. Like once something is stabilized, then it goes on for many years, right? Yes. So expect some of these things maybe from 1 year or 1.5 years down the line, where from the components the margins may improve.
So I was asking you more from an FY26 point of view, sir.
FY26, okay. So in that perspective, I think, if you compare with films, again, it's a mix of many products where the margins are really good in where high technology is involved, like IR products. Whereas on PPF, it typically depends kind of the development of the component. So per unit basis, it's going to be good on PPF and then window films. And in that, architectural segment seems to be quite good because a lot of high-end products are there. And of course, then it comes the shrink film on IPD.
Great. Sir, one quick question. There's some confusion, therefore I'm asking this. Earlier, when you referred to the guidance of 2,500 crore rupees, we are talking about FY25, right?
Yeah.
Okay, great. Thanks very much and very best wishes, sir.
Thank you. Thank you very much.
Thank you. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yeah, am I audible?
Yes.
Sir, my question is, in spite of PPT running full utilization, why haven't the margins expanded, sir? So, are we lacking the pricing power, or the competition intensity is too much? That's the first one. And second is about the expected growth rate over next 3 to 5 years, any capex plan. And lastly, sir, our price funding is always retained, but eternally at a low side due to some legacy concerns on RPTs and land sale profits will not be being received by the minority shareholders. That's the doubt we are having. The public is having perception issue, you can say. So if you'd like to address that also. Thank you.
Yeah. So one by one. First of all, capacities are not utilized full. Like we said, if you see IPD from 99% to it has gone down to 78% because we do not take many orders which do not make profit for us. That is especially on the commodity segment. So if you see the peers on polyester industry, their margin compared to last year, they are not even 50%. I've seen most of the numbers from the industry. So we avoid the commodity as much as possible. So that is the concern. But we are working towards more of a special product like low oligomer, especially on shrink. That's what the guidance we have given, and some new developments from the customers from America. So that will definitely improve. That is number one. Second thing is PPF, definitely it has gone beyond 100%, and we have further scope there. We will continue to grow. So that's number two. And number three, on sun control, as compared to last year, the volumes were lower, though not significant, but still they were lower because last year there was a big demand after COVID for the first half in FY23 as compared to FY24, where the interest rates are higher and car sales are affected because of that. And plus, as I have just come from USA with a long meetings with around 200 customers, we understand that demand has gone back to the market. That's why there are some concern on a high interest rate in USA because of geopolitical tensions and all. But things look much better and brighter in that. So these things on sun control, I gave you three perspectives. Like first is IPD. Second is on PPF, which has been outshining, and third is on window film, where we are doing reasonably well, but there are more opportunities there, especially architectural coming into the picture. So that's why you are seeing there is on margins, because IPD margins, like as compared to last year, they have gone down really low. Even on the specialty segment, there has been low demand, though margins were not affected, but demand in North America because of this geopolitical tension has been low, which is showing signs of recovery. So that's what on the plant performance. And on second part, Hari, would you like to address on the second part?
See, on the related party transactions, we had explained earlier also that as the transactions are, of course, the volume of transactions is high, but all are as per market standards and on an arm's length basis, and it's approved by the audit committee, etc. But without going into it, we would see the point is there is a value add which is coming from the business where we are taking the process, getting our films process from the entity, GIPL entity. So till that benefit is there, it's advisable to continue with that kind of processing. And
anyways, thanks for your answer, Hari. And then his question was I think land bank utilization and all. So in that, we can say that there are a lot of opportunities available for us, and we are, as I said, there are many manufacturers who are inclined to work with us. So with that, we may look for further expansion or something which is not yet decided, but company will consider all its options available before moving ahead.
Okay. Thank you.
Thank you.
The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thank you for the opportunity, and good to see the significant ramp up on the PPF side. So the first question is on the PPF side. This quarter we have crossed 100 crore of quarterly revenues and almost reaching 120 crore per quarter. So what exactly is driving this growth? Is it our white labeling partnership that we have done with the players in the US market, So what exactly is driving that? And, given the base we have reached of let's say 120 crore kind of PPF run rate in this quarter, do you think this has now become the base and will grow from here, or, is just one of quarter phenomena and, PPF sales might come down in the coming few quarters?
Not really. I mean, it has been a consistent effort from our side and consistent business, because if you really see, it has started last year, the percentage of PPF, if you have seen on the slides, were only 2-3% on the revenue, whereas in Q4 FY23, it has started coming to slight better numbers, which were roughly, I think, close to 10%. Then if you see in quarter one was around 16%, Q2 it had gone to 30%. So you can see a substantial, but stable. I won't say stable. It's a substantial growth which has been there. And coming whatever we have, what we foresee, these kind of trends should continue.
Sure. And what exactly is driving this?
Yeah, okay. So what is driving is there are 3-4 factors. One is we have continuously grown on the domestic market. Like if you really see the numbers which were non-existent last year, this year we have gone to substantial numbers. And of course, we have another 6 months by the end of this financial year. We have further plans to double that in the domestic market. So that is doing good for us. Then in the market which are other and USA market, where we have of course some manufacturers, we have tied up with them. So some of the volume additional coming from there. And lastly, we call the third thing is the rest of the world. Like our sales are like that: domestic, USA, and the ROW, which is rest of the world. There we have got a very, very good volumes from countries like Russia, Middle East and all, where this is like Middle East is a PPF crazy market like USA. So there the real value comes. So it's a combination of all geographies and the efforts in all geographies. So that kind of, it's from everywhere. I can see even the countries like which I have never heard, I can't name them, but they are the countries we have not heard in the normal business. There also we have got orders for 500 roll plus single orders kind of numbers we have seen. So the growth has been really phenomenal, even each and smaller part of the world.
So, and you expect the growth momentum to continue going forward also?
I expect with all the efforts and everything, it will continue, yes.
And on the sun control films, especially on the architecture films side, as you had discussed in earlier call, that this is contributing to roughly around 15% of our overall sun control film sales. So roughly around 110 crore kind of revenues which are coming from this, and we have launched a lot of new products in the segment now. So, and we expect that growth in this in SCF will and architecture films will be a large contributor to our growth in SCF. So this 100 crore number, how do you think this number will be growing over the next 2-3 years? When you say sun control films, the new line will get fully utilized by, let's say, FY25 end. So this will be largely driven by the architecture films, and how has been the uptake, or how has been the acceptance of our products in the market since we launched this product in the export market now?
Yeah. So as I said, the range company thought 2 years back when we saw there may be a kind of saturation on the auto industry, because that time it happened because of the chip shortage, and then it happened because of interest rate higher. But architectural segment, which is a unique segment where people live with or without such kind of architectural films, where this adds to lot of aesthetics. If you give the real, perception and I would say awareness of this product is really low into the market, right? Even in the place, like I'm just giving example to the forum, like the way we think on that, like we are at Aurangabad, there also some high-rise buildings, I can see the sun hits directly there. So people really feel, these curtains and all those things are not enough because that completely blackens out the space. So the knowledge, the awareness which we and our partner agencies have created into the market, especially on residential and commercial as well. So these kind of things have been really well taken, because if I know personally many people, to 15, 20 people, even with after my talking, people have understood the value of high quality sun control films, which rejects up to 99% of harmful UV rays. At the same time, it rejects 30 to 40% of heat which is coming there, and at the same time giving you a perfect panoramic view without putting curtains and all those things. So this is something which is a very high value product, and for that we have created campaigns on digital media which are related to localized approaches where people see sun is coming, sun facing kind of buildings, and then we have done a lot of door to door and big society campaigns where our team is their outsourced team along with our partners going there and having their small camps in societies and making people aware of that. This is a long process, but we are getting really, really good returns. And lastly, we have done many big hotel chains and IT companies where their spaces are quite big. We have been there, and our team or outsourced team has explained all those benefits, and we are getting really, really good response of them in Indian market. And similarly, in the market like USA, where we are now quite aggressive with our distributors and dealers. We are presenting new products. They like, these people always look for new products where we have made these unique and very high-end products which are accepted well. So the approach is very different on each market, and then you go to European market, it's a completely different market where people do not allow people to enter their house to put the film. So their exterior films is a big phenomena, which is a very high-end product, and because it comes directly into the contact of sunlight. So there also we have launched a product which is for the exterior application. So all three different geographies which are major, we have a different approach, but we got a very good response of this. So that's why we are quite aggressive that this number should be anywhere 2 times or even 3 times in next 2 to 3 years.
Sure. And one clarification on your guidance of 2,500 crore. This is for FY26 and not next year, right?
This is actually, I have to see, Mr. Mehta, can you just see the guidelines? It was for FY26, right? 2,500 crore.
There is a confusion because multiple people ask about this, and
so we want to be consistent on our answers and of course in our performance.
Basically 2 to 3 years, so we'll achieve this target.
Sure. Okay.
We might achieve even earlier and all those things, but yes, there is a guidance of achieving in 2 to 3 years, which we will do, 2,500 crore. Yeah.
Sure. And broadly, if you can indicate, in this, let's say, 2 to 3 years, whenever we achieve 2,500 crore, a broad breakup of, which segments will be contributing, how much as per your estimate, let's say PPF, will contribute, how much will SPF contribute, how much will, let's say, IPD or let's say largely value-added product IPD will contribute in this?
Yeah, I think roughly to that we can reach around 40%, 35 to 40% on total would be like PPF, and similar number maybe 40% or 40 to 45% because architectural will be added to that. So that will be on window film side, sun control side, and balance will be IPD. Because IPD will also, because it has now almost a year where we have started rebounding our sales, especially on the shrink films and low oligomers. So there also there will be some growth possible. But broadly these would be the numbers. So 40, 35, 25, these kind of Things I expect. This is a broad number. Things might change depending on the situation, but this is what we feel like.
Sure. And just last question on current year performance. We first two quarters or the first half has largely been flat, primarily driven by SCF challenges on the SCF front as well, and more stimulus on the IPD front side. So given the kind of visibility you have for the second half, can we expect 10-15% growth for the overall revenue in the full year, or that looks a bit challenging in FY24?
I expect to be better than what it was last year. The simple reason is this is the quarter where IPD went really low. So we have now, in first half, whatever we were losing or going down on IPD was made up by consistent growth of PPF. Now, if PPF growth, as I said, will continue stable to continue further, right? And if you see comparison with IPD, definitely it is going to be stable or going to be better. And on Q4, when the season comes for sun control, so in all, I expect good going forward.
Sure. Thank you.
The real reason which I'm trying to explain is the IPD last year when the decline started, so we are already there. So nothing more to compensate for that. So it can all be the additional.
Well, that will now become at least the base, given how the market is currently.
Yeah.
So, thank you, and wish you all the best.
Thank you. The next question is on the line of Aman Vish from AlphaStreet Investment Management. Please go ahead.
Good afternoon, sir. My first question is on the sun control film side. So the new line, which is 1800 LSF, at full utilization, what kind of mix do you expect from this line between architectural film, the normal sun control film, and maybe some PPF components?
Ideally, what we would like we said, we have some plan. Again, these are very granular plans inside the factory where we have now done some of the other facilities to use as a fungible for PPF, so that going forward when the high season comes, the new line would be more or less available for architectural and normal window film, high-end products, IR products, right? So our aim, because till that time it was quite fast. We were rushing and we were able to get such outstanding order book for PPF, right? So that's why we use that. But in the meantime, we have taken our time and stabilized another fungible line to support the PPF line. So there we are good. We will try to produce more of PPF from somewhere else. So having said that, the growth on architectural will be, like I said, we are expecting in 2 to 3 years double or triple the volume. So that volume will come from new lamination line. And finally, with the season, most of the products, high-end products, will be made on a new sun control line.
So, sir, the mix between for 1800 SCF line will be like 60.
So we'll try to go somewhere around roughly, as I said, 20 to 30% on architectural, but that is 2 years down the line, and around 50 to 60% on the automotive segment, and balance, if required, only 10 to 20% on PPF, because we are making some other arrangements where we do not lose any capacity when the demand peaks up, right? So that's why we have internally made arrangements to debottleneck for the usage of PPF.
Sure, sir. This helps. My second question is on the margin side. So I understand that each segment, for example, sun control film, have various types of films, and even in some quarter like Q4, there will be mix of high-end sun control film, so the margins might be higher. So not talking about quarterly basis, but on yearly basis, as of this year, if you have to give the order in terms of margin, among the 4 products, categories, which is sun control film, the architectural film, the PPF, and shrink film. Where it is today as of now, and with the we have talked about PPF, we will be doing some backward integration, more component in-house. So after doing that, where will the order, what will the order look like?
Yeah. See, the top one again would be like high-end IR products or safety gazing kits on number one, right? And then it would be PPF, then the second category of window film, and then shrink film. That is now, and it will remain similar even after we change this thing, because there are certain in-house patented technology on sun control. So the top-end products will still remain top-end, but very close to PPF. So
you are saying
sorry.
You are saying PPF will reduce the gap between itself and the top end for sun control film. This is what you are saying.
There will see it as again, as I said, window film or architectural, because I didn't mention architectural here, because architectural products are like very high-end products, and I mean the technology and all those things is quite high. But still, as I said, in the current scenario and the future, the top-end products, which are high-end products of sun control, they are number one, then PPF, then other products which are like not high value added of window films, and then shrink films. Now, shrink film for, again, there are categories, like if you really see, the Indian margins and rest of the world and USA. There, USA margins are quite good. Again, they might come above the sun control lower end products. So it's like a big combination, but you can understand even on the shrink film, there are very high contributing regions, whereas in window film, it's mainly on the product, whereas in shrink market is mainly on the geography. But again, this up and down can happen, but broad guidance I have given it to you. Because there are, even sun control, there are maybe 50 plus SKUs depending on the different profitability.
Yeah, but on an average, it will always be better than the PPF margins.
Yes, definitely. Again, if you talk about the entire basket, because you know, it is a new business for us, sun control. PPF. And sun control, we have lot of things, like we are only few customers, few manufacturers in the world who supply very high-end products which are deep dyed and all. So, and plus IR is a very unique phenomena which we do. And the process which we do is again very high-end, and the quality is 25 years in making. Whereas in PPF, it's more of a business where we have achieved all those things in 3-4 years. Maybe in a very long-term phenomena, that PPF might even go up, like on matte PPF. Definitely the margins are going to be much higher than this one. So there are possibility everywhere, and we keep an eye, like where we can increase the margins and all. But this is guidelines is what I told you.
Sure, sir. That helps. My next question is on the domestic PPF business.
Sorry
so,
to interrupt you. In order to the management be able to address all the questions, I will request you to please rejoin the queue. Thank you.
Sure.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. The next question is from the line of Ankit Chawla from Subban Ventures. Please go ahead.
Yeah, hi, this is Ankit here. So a couple of questions from my side. So in your Q4 FY22 call, you had mentioned that, you had given a revenue guidance of about 1,800 to 900 crores. I understand that there's been some stress at the IPD division. So, what kind of revenue run rate would you have for the next couple of quarters?
Yeah, I think going because of ups and downs in that particular segment on IPD, and some of the business, as I said, we do not entertain because of the margin pressure. So I still feel, there may be 10% here and there, but we hope that we will be able to grow on PPF business, and with Q4 being like the full-fledged demand season for us, so we'll be able to maintain that.
Okay, perfect. And my second question was actually to understand your IPD unit, if that can be utilized for production of PPF.
Yes. See, again, there are many components, but yes, some of them are being utilized.
Because what I actually wanted to understand, since you were running, on full capacity for the PPF, and you were also kind of using the SPF capacity as well for the production.
Yeah.
Would you be going for capex of 80 to 100 crores for the line addition in PPF, or would you wait for it?
You mean IPD capacity to be used for PPF?
Correct, because you're running in excess of 100%.
See, we use some of the products already for PPF and of course for sun control. But what we have done is, as a strategic move, I cannot go into very detail, but just for the information of the forum, what we do is we are now focused on many products which actually directly made from IPD and some value addition on CPD, and these are part of some new product developments for us. And one of the product, actually we started getting good orders also. Means the products which are like, very high-end products from CPD, but mostly it is made on IPD. Like some products are there, we identified. So we make the base in IPD and then transfer it to consumer product division, and then we do some value addition there, and then it goes from there. To continue, if you really see the nightmare, what is happening in the polyester industry, polyester film industry, is so that is a well thought of plan where we have converted into this kind of business. And PPF, it will take, as I said, 1.5 years. There will be many components or almost everything, whatever is required from polyester will go from here.
Okay. And your capex for FY24 and 25, if you could just help me out with that number.
24, 25?
Yeah.
See, again, this is a development process. I cannot guarantee or some think that it will happen or not happen. But yes, the aim is that we will achieve that by that time.
Okay, that's it from my side. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Priyank Agarwal from Equities About Private Limited. Please go ahead.
Yeah, good afternoon, sir. So am I audible now?
Yes.
Yes, sir. So my question to you is with respect to the PPF business. So like as you mentioned that SCF domestic sales contribution to the total sales would be around 6 to 8%. So I wanted to understand what would be the PPF scenario for the domestic market in terms of percentage, if you can specify. And also, sir, I want to understand, as you mentioned in the last Concall, that at peak utilization, PPF revenue contribution would be in the range of 450 crore. So, sir, is my understanding correct about this revenue contribution about PPF?
Yeah, with the current rate we are growing because as I explained that there has been Q4 23 where the real PPF started coming into the picture, and we touched around 10% of total revenues, whereas in Q1 we did around 16%, and then in Q2 this year we did around 30%. So if we annualize with this, we will, I think, easily cross that thing. We can even go to, with this rate we can even cross 400.
Right. And sir, what about the domestic market? Like, what kind of mix we are looking forward, like in terms of total sales? As you mentioned that we will be going forward in the next 2 to 3 years. As you said that PPF would be contributing at around 35 to 40% to the total sales. But what would be the domestic scenario? I want to understand that.
So on domestic, if I see with this, domestic would be, it's like 20% of the PPF.
Right. Answer one last question regarding.
Just recap that the penetration in India is only 0.4 to 0.5%. So we have an aim to take it to, at least 2%, 3%, whereas the China rate is around 10 plus percentage and US is around similar into 10% range. So looking into this market and we were almost 0 or 0.1% 2 years back. So we have, which is now around 0.4 to 0.5%. We can at least take it to 3 to 4 times. So in immediate 6 month time of, we can do it to at least a percentage, 0.8 to 1%. So that growth itself is will double our numbers and will reach around 20% of the capacity.
Thank you for that.
Yes.
Right. And so one last question, quick question with regards to the margin. So how does the PPS margin differs across the sales channel? Like as we are expanding into, like we have retired with Mahindra, right, into the OEM segment, and also we have been aggressive in opening the Garware application studios. So sir, how does the margin differs in this across this sales channel?
See, it's a very, I think, standard marketing practice that wherever we go through Garware Application Studio, definitely their margins will be higher because a lot of efforts are required. Our marketing campaigns, digital marketing campaigns, all are aligned towards to get that kind of growth, right? So when we go to big OEs, definitely there will be like a volume commitment from there, so there will be some advantages to them. But again, it is well, all those things is being averaged out and giving good returns to us. I mean, exact nitty-gritty or numbers we can't discuss, but definitely. And as I said, our aim is to build a long-term brand recall for Garware into domestic market as well, where our major aim is to penetrate the brand all across India, all corners of India, and all through network channels, right? So we are well set on that direction. Wherever we do like alternative component developments and everything, this will automatically increase our margins with that.
Thank you, sir. That's it from my side.
Okay. Thank you very much. Thank you.
Thank you. The next question is from the line of Aman from AlphaStreet Investment Management. Please go ahead.
Yes, starting with the domestic business. So we have now 500 dealers, and we plan to take it up to around 900 dealers, sir.
Yes.
So on an average, so obviously there will be some dealers at low utilization, some at medium, and some at high. But on an average, at peak kind of sales, from 900 odd, should we assume like we can do like 300, 400 crore kind of domestic business whenever it happens? No timelines, but what number should we assume with say 900 to 1,000 dealers? What kind of peak domestic sales we can do?
See, you are talking only on PPF or PPF plus?
Yes. No, PPF only.
Okay. Only on PPF, as I said, I'm expecting around 20% of the business from, by the end of this year. So, because that will be annualized for next financial year. So with that, you can assume if we have that kind of volume, so I can assume that will be like around 150 crores kind of business with that. And this is, like I said, from 0.1, we have reached to a level of 0.5. And the numbers which I'm talking is like kind of around 1%. So you are 100% right. If we further grow next year from 1% to 2%, right? So that number is going to be around 250 to 300 crore. It is possible, but might take 2 years or 3 years to reach there. So domestic business that with this can go up to 250 to 300 crore.
Sure, sir. That helps. And on an average, say for a dealer, normally the mix between the business he gets from sun control film versus PPF film, is the mix like PPF might be like 60-70% given the volumes required is the value required is more, or what is the current mix and what is a normalized mix for a dealer?
No, it is very premature to talk on this level. The reason is all the PPF is very new into this segment and it's growing very fast, right? Definitely PPF component would be more, but if you really see sun control per se is much higher penetration, which is roughly 30% penetration as compared to 0.5% of PPF, right? So and there are much more channel because we have been very seasoned player on sun control. So we have a very wider network of sun control sales in India and as well as over the world, right? So PPF channel is just started. So exact comparison is I don't have because it is too early to do that. When we stabilize our volumes to, like I told you, 250 to 300 crore, that would be like the area to understand. Like it doesn't help us anyway how much is PPF or sun control percentage. It helps us by increasing the penetration. Both sun control and PPF. Sun control is a quite strong and standard and stabilized thing for us, whereas PPF, we are continuously growing. So we are not stopping for all those things. So, and there are many distributors which are like focused only on PPF. There are many distributors and dealers who are only doing sun control. So it's not apple to apple to many distributors.
What is the number of dealers who are doing sun control for us in India?
For sun control, so we have 100 plus. Yeah, there are 100 plus dealers because my team is here. So they are saying 100 plus dealers, distributors, those who are big doing for us that. But and for that we don't need to reach like like we are doing in PPF because the business is high value business and we had to use a different strategy by creating market or the secondary sales channel and creating a demand or push from the secondary market to help us distributor to sell PPF, because when we just started giving PPF to people, they were not able to sell. So we had to create and we had to make a field for these people to sell the product. So PPF, we have done a lot of work to create the market so that our dealer distributor can sell the market, and that's why we reach directly to OEs and dealership which are 500 in reach and gas which are like 100 in our fold. So on PPF, it's a different strategy, where on sun control it is very different strategy.
Sure, that helps. Just to complete this point, on the PPF side, sir, so you talked about previously, I think that, say, if you have to do it, average car might cost around 1 to 2 lakhs, depending on what kind of film and all those things. But I think my understanding is most cars still only use it, say, on one part of the car, and average realization per car might be around 20,000 plus minus something. I can be wrong. This is my assumption. So if you can talk about, have you seen this usage increase in terms of last few months or quarters once we have started marketing more? Maybe we have created so many SKUs. So does the use per car is also increasing? One is obviously you can get more customers, but in the cars, in the people who are trying to use this product, is the value per car also increasing?
See, what happens is there are the people who are using components are really low. It looks like there will be more people, even we also thought. But with the experience, we can clearly see the people who are doing full cars are much more than people who are doing partial, right? to just make the forum more understandable is that we are also doing on many bikes. We are doing big events with big manufacturers of bikes. In fact, we are participating in a show by invitation in Goa during this month. So even bikes and certain other smaller bikes, e-bikes are also using our products. So these are small applications, but the volumes are really low. Whereas when you talked about the prices like 1 lakh to 1.2 lakh, we have many big distributors, high-end, not distributors, many dealers. They are doing high-end cars. They are doing at a price of 3 lakh also. 3 lakh plus. So they are the very different channels, and we give them very different branded product. So we have strategic moves there. We just don't disclose all those things like only 1 lakh, 1.2 lakh, because our PPF is also being done at a very high brand for 3 lakh also. Those people who are directly buying from us in India, right? So there are, I can say, 10 different channels where we are selling, depending on, like, we are also doing to e-bikes, to other bigger bikes, to part of the car, to then full car. So there are 10 different methods where we are selling. But every strategy to sell all those things is well defined, and we are using those to increase the presence and margins for the company.
Thank you.
Yeah.
That was the last question for today. I would now like to hand the conference over to the management for the closing comment.
Yeah. So, on behalf of Garware High-Tech Films, I would like to thank all the participants of this call, all the investors and people who joined us, and thanks for the patience of listening us. And we assure you that we are doing every bit to create the high value for all stakeholders. Thank you very much. Thank you.
Thank you. On behalf of Garware High-Tech Films Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.